Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we talk about conviction versus false confidence, this week in the market, and Facebook's ticker change.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
We're up 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity Dips,
And Hugh Henny.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today it's a spooky one. It's Sunday. It's October 31st. It's Halloween. And the money we have been seeing in the market, it feels like it is honestly made up for the past 3 months in the market. The happiness on FinTwit has made up for the past 3 months of sadness on FinTwit, et cetera, et cetera, et cetera. Have you basically made up for the past 3 months shittiness in just this past couple weeks?
Yeah, I think Verde said it best. He said, I had my best 3 months in 3 days. And I think that's an awesome way to put it. You know, we always go through a really slow period and then it gets hot for 3 weeks and we make more money than we could ever imagine. And I think that this is we continuously get cold and then we heat up and, we get into this mindset that like, oh my God, we're never going to make good money again. This is the new normal for the market. And then we get a fire week like this and and if this continues for another 2 or 3 weeks, everybody's going to double their account again. So I think it's really important that we remind ourselves of this. But then also I had someone send my DM saying like, oh, like Hugh, like I doubled my account this week. If I can do this for the rest of the year, I'll be at like $4 million. And I was like, dude, that's where we get into the, like when it's cold, we can't always be like, this is how it's going to be forever. But then when it's hot, we can't be expecting to double our account every single week for the next year. You know what I mean? So I think that it goes both ways. Also, like I'm seeing people buy cars because of this week. Stop fucking buying shit. Like, yes, it was a good week, but if the market goes cold again and you took that money out of your account, you're gonna be pissed that you bought that Porsche. Stop buying shit.
Damn, you didn't have to get like specific with the car type.
Yeah, I'm talking to you.
Hey, I didn't buy stuff. I got stuff taken away from me this week.
You want to talk about that?
We might go over that later. I'm still really sad about it.
You think she's a listener?
No chance. She might now just say, yeah, long story short, I got like $20,000 worth of stuff stolen from me this weekend, and one of them really hurt. It had a lot of sentimental value, and I've been really sad about it since Thursday morning.
Do we know
when
who
it happened.
she is now?
There's no chance we find this fucking girl, man.
Dude, I want to find her.
I'm cutting my losses. I'm sad. Yeah, this week has turned me a little more misogynistic. Not gonna lie. I'm just kidding. But yeah, I'm going through it. But fuck, man. Just talking about it makes me sad. But the market makes me happy. Yeah, the market makes me happy. And this week, this week you see the pop and drops, and you see the pop and holds on a lot. But what's nice, it seems like you see a lot of these pop and hold, like what we always talk about. But some of them, which I think are also good buying opportunities, like you see the ones that pop like crazy and drop a good bit, like let's say My Size or ITRM, they pop 20 to 50% back at the like place where they popped again. Are you seeing any of these where it's like, hey, I see the price action and I'm going to load just on, they're back at the price they were at in a market this hot. Like, let's try and take them for round 2.
Yeah, I'll totally take something if I feel that there's even a chance that it's going to pop. And sometimes, like Friday, I got bagged on it. But that's okay, because inside this market, if it does go, it will run 100%. So I'm a little bit more, with my risk, I'm a little bit more risk on than normal. Like, I ran out of buying power on Wednesday for the first time, like, all year. So I'm totally risk on right now. I'll take a less probability, because the risk, the reward is so much greater right now inside this market. Things are going farther, they're going faster than ever before. And so I'm totally risk on right now. I got bagged on Friday using that strategy, but that's okay, because Monday through Thursday was so hot that it's okay. Like, it's one of those 10 steps forward, 1 step back, where usually I felt like it was 3 steps forward, 2 steps back, or 2.5 steps back. So I'm totally okay with risk on right now. Like going heavier size, heavier positions, trading shit that I would never trade, like piece of shit. Obviously that's where the bread and butter is. But right now we're seeing like these China stocks go. We're seeing like the dog of dog shits run 300% right now. And I'm okay with trading the ones that, like, I know have S3s, because the volume is crazy right now. They're so liquid. You can get in there with size. Look at METX. METX is trading so thin right now. Through the pennies. It'll go from 50 cents to 70 cents back down to 60. You can capitalize on those moves.
Yeah. And another thing, like what you're saying, like, got bagged on Friday. It's a lot easier being bagged when the mentality of it is, hey, I am 10 steps ahead, and this could only take me back a maximum of 2 to 3 steps. And in this market, it's usually just 1. And knowing that if it launches, it's taking you 6 steps forward. So that's kind of the risk reward. And it's a lot easier to be bagged and to keep adding when you're up a lot. Because when you're down a lot and you're red on even the day, and you see it's hitting another mark, it's hitting another down, it's down another cents, down another 2 cents, you'll probably sell. But if you're up big on the day from another trade, you'll probably be like, I'm about to slap this shit with all these new profits,
Yeah, exactly. You already have a buffer. So it's like, if you're up $2,000, you know that you have that $2,000 buffer. So you're willing to risk 300 of that 2,000 if it's going to make you another 1,000. It's that mindset, because at the end of the day, you still are going to come out decently green. So I'm totally okay with that. Like I said, Friday I got bagged. Like, I should have walked away earlier. I kept pushing because I was trying to hit, I was trying to hit my biggest week in a long time. So, but that's okay. It is what it is. Like, at the end of the day, I think it was like that AGAI or whatever. It was up on it was up 100% on a price target. And I was sitting there soaking size, and I got bagged on it. And at the end of the day, I was like pissed. I was like, what the fuck? But at the end of the day, like, I was chasing something up 100% and soaking something that was up 100% because of a price target. Like, that's on me. So as long as you understand that, this thing's up 100%, this thing shouldn't be up 100%, and you're okay with that kind of risk, like I was, I'm totally okay with you chasing shit. Smartly, on a pullback, sitting there soaking. But the second that it fails, I'm out.
Yeah, it's a weird thought process after one of these fails, and then you think like, why the fuck did I even take this? I would never take this. But then you have to think 10 steps forward, 1 step back, as opposed to what you were just saying, because there is no reason you would take that in any other market. It's just right now, it is the thing to do, because there are so many opportunities to make money. It's like, if work was just, you got paid for every hour task, well, now there's 60 of them and you get paid twice as much, instead of there only usually being 9 1-hour tasks in a day with your average pay. It's just like they're all over the place, and we're staying at work late to get them. Yeah,
exactly. So, that's on the, I will say though, and I think we talked about this on Wednesday, this is creating terrible habits. And the one thing that I want everyone to understand is that, again, do not expect this from the market. Okay, everything was mooning. I mean, fund went to 24. Fund shouldn't be at $2, let alone 24. Okay, understand that part of it. The other part of it is that, we have to remind ourselves, okay, like we need to like mentally prepare for when it stops, because the issue is that everybody will 5x their accounts right now. And then when the music stops and that faucet of algos turns off, I mean, accounts will be cut in half in a week. Because again, you just get in there, you soak, you're going heavy, like 60% of your account, you're in there. And then all of a sudden something's down like 40% and you get smoked. So it's one of those times where we have to remind ourselves what it's like right now when it's hot, but also mentally prepare for when that faucet of all algos turns off, and that's the thing, is that right now it's like, we're high inside the sky. We think nothing can go wrong. And then when it gets cold, we forget about these times. And same thing, right now it's super hot. We forget about the cold times, like right now, hey, if I did this every week, fuck, it'd be insane. But when it's cold, I'm like, holy shit, Trader Joe's ain't looking too bad right now, so it's one of those things where like, it just comes back. Everything inside trading is that mental. But I mean, props to everyone who did great this week. I will say though, if you had a great week, let's just say, I saw people doubling their accounts. If you doubled your account this week, take 30% of your account out. 30% of your account out, just withdraw it. Especially if you're new, if you kind of got lucky this week, let's just say like, you kind of chased some alerts on Twitter, or like, you were just throwing shit. Listen, take some money off the table, because at the end of the day, I'm telling you right now, everybody's doing well. I shouldn't say everybody. A lot of people are doing really well. And when the music stops, there are going to be accounts cut in half very quickly. That's how this game goes. Everybody gets overconfident. Everybody starts 5x in their account, and then the music stops. Accounts are cut in half. Same thing when it's slow. And that's what we try and do, is that we try and prepare for the hot time so that we can capitalize. And, and when it does get hot, we're there, like we're sizing up immediately when it gets hot. We were preparing for algos to turn on for what? 4 months? Like literally, I feel like we were preparing for 4 months. And I know personally, like I felt like I capitalized the second that DWAC went hot, I was there. But again, now that the market's hot, now that algos are on, we need to start actually preparing for when it gets cold and when algos aren't turned on. So that's what I'm saying, is that if you doubled your account this week, if you had a killer week, take some money off the table. If not for any other reason, at least for taxes. Okay, I know people who literally turned $30,000 into $1 million. Tax time came and they ended up losing more than basically more than what they owed in taxes. And so, you never want to get into that situation.
Yeah. No, it's funny. What I realized was that this is before we get into the main topic, was that like giveaways and gifts, like let's say you win a Ferrari and it's $300,000 and you're making a slick $40,000 a year and you win a raffle Ferrari. You have to pay gift tax on that with like a 30%. Yeah, it's like so you got to sell that Ferrari because you're not paying that.
Well, you have to, and then it comes down to, most of the time, let's just say that salvage, some of them are salvage titles, and then they come back and they'll, obviously fix them up. So they're not even worth like anything insane, like nobody's going to buy like a salvage Ferrari that from like Price is Right, It's crazy.
Well, okay. Getting into the main part of this episode is going to be, conviction versus just false hope. And also seeing how conviction plays into a hot market, because obviously you don't have to exactly have the same conviction, because like you said, you're in shit companies that still go 1,000%. But there is obviously the main thing of, hey, I have mad conviction in this, and then B, of false hope of I'm just adding every time it breaks support and I have a fuck ton.
Yeah. So this is a really important topic, because it's always that balance line of conviction versus that false hope. So much of trading, as we always say, is that mental side of it. And part of that is that, there's nobody sitting there saying, this is going to work for sure. Like that's why we make stupid money, because there is so much risk. You don't know if that news is going to come. You don't know how that data is going to turn out. You don't know if that company is going to go bankrupt. You don't know if that company is going to have a shit quarter. Look at Wish. Everybody's expecting a great quarter. Not only do they not have a good quarter, they fucking shit the bed and give future guidance that is shit. That is literally the worst guidance I've ever seen. So it's one of those things where it's always that mental balance. And that's why so much of trading is the mental side of it, but also managing your risk. Because at the end of the day, if you take a 70% haircut on your account, not only is that going to fuck you up mentally, but also you're not going to have any money to make more money. And that's what you need inside this game. Money makes money, And so I think it's really important that's why I use the matrix, because I think it's important that you get out of that constant balance. If you're constantly asking yourself or going in between, I don't know if this is the right move, I don't know how this is, then it's not the right move. It totally is not the right move. You need an edge. You need to be able to come into the market and have a plan and be reactive. Your plan doesn't always need to be front and center, and it doesn't always have to work. In fact, you should have 2 or 3 different plans, because your plan is reactive on what the stock does or what the company does. Like I have a plan to where for most of my swings, if the company releases this news, this is how I'm going to treat it. If the stock just goes up on nothing and on air and no fundamental reason, this is how I'm going to handle it. So you have a plan and you react to the company, you react to the stock on that plan. And that's what I think is really important. But getting into this, conviction versus that false hope, that's why I think a matrix is so important. We talk a lot about my matrix. What it is that this is how I take the emotions out of it. This is how I decide how I'm going to size into a swing. This is how I decide if I have that false hope. Because at the end of the day, what do we always say? The CEO is a cheerleader. Okay, the CEO only comes out and talks about the bad shit when he's forced to talk about the bad shit. No CEO is going to come out and be like, we might go bankrupt. He only says it when they are definitely going bankrupt.
I don't know. Elon Musk tweeted the price of Tesla's too high.
Listen, everybody's playing checkers. Elon Musk is playing poker.
He's like just found out about reverse psychology. He's like, holy shit, reverse what?
yeah, exactly. So I think, exactly. So it's one of those things where, Elon Musk playing poker while we're all playing checkers. But for the rest of us, that's how I take my emotions out of it, because it's so important to take your emotions out of this game, or at least be able to take part of them out, or else you'll get fucked. You'll get smoked inside this market. So again, talking about the matrix, mine specifically talks about the, so it's basically out of 10 different rows, 10 different columns, and it's out of a score of 100. And based on that is how I size and how confident I am inside the play. Because sometimes I'm inside the play and I'm like, man, I love this. Like, they're going to come out with this. And then I, throw the matrix on it. And it comes out that I should have half the size that I really do. That I was drinking the Kool-Aid, that, hey, there is bigger risk than I originally thought. So I think that it's important that, you don't need to do what I do with the matrix, make it a big thing, score it out of 100, but you should at least have a checklist or a way to take the emotions out. Like I said, mine is based on the chart. It's based on the management. Most of the things are quantifiable, but like you can't quantify and put it in and say, okay, this management team is better than management team based on this. That's not quantifiable. So how I do it is that I kind of, that's more touch and feel. But again, I'm still able to sit there and say, hey, this management team owns 30% of the float. This management team buys the stock anytime. That's good to see. Like you look at like SXTC, the company owns 0.01% of the company. Like that doesn't matter. That's part of the reason why last year I went so heavy and I pounded the table on UAVS inside my account, because the owner, the founder that started the company, he had never sold a share. Like I was like, okay, this guy fucks. Like this guy cares about this company. So that's for the management side of things. That's where I think it's so important. And then again, the chart, the volume, if there's a lot of volume on this thing, and the chart's not really curling, I know that somebody's there accumulating. So that goes into it. The other thing is the sector. What sector is it? As we move into the winter, usually bios heat up. So I'm looking at different bios, especially if the market stays hot. Some of these bios, I mean, they could get like good preclinical and they could go 300%. So I'm there. I'm looking at bios because of the seasonality, because of the market that we're in. And then of course the catalyst. How good is the catalyst? Is this a phase 1? Is this a phase 3? Is this a need inside the market? If it's not a need in the market, it might be a short. There's a few times where I would be, when I first started inside this career, and something would get FDA approval and it would go down, and I wouldn't understand. I'd be like, this makes no sense. And then it was explained to me, okay, think about it this way. If Pfizer has an ADHD drug and let me see, like Jagex has an ADHD medicine, okay? Jagex has $100 million in cash, all right? They get approved for, their PDUFA goes through, they get approved. It's going to take them $50 million to commercialize it. And then on top of that, it's not going to do any revenue. It's not going to be a good risk. I mean, it's not going to be a good return on investment because there's so many other drugs out there like it. And it's not setting them apart. There's no need in the market. So that was actually a short, because instead they're spending all their money. They're going to have to raise at some point, which means that they're probably going to have to dilute the stock. And so it's a short. It would have been better if it actually didn't get approved. So that's, again, part of the matrix is this a need? Now, again, that's for a swingers. If you're a day trader, it should be a little different. Like, you should look at the share structure. You should look at the dilution. What's the risk of dilution? So many times we're trading things after 11 a.m. and we're like, wow, a market maker's in here. And then all of a sudden they'll drop like a midday offering. And you have to remember is that if the market makers are keeping something up after 11 a.m., there's a good possibility of an offering. You have to keep that in mind. So when you're day trading, if you should just always get into the habit of the top 5 tickers. If they're up more than 50%, you should be there looking at how much cash they have. What's their burn rate? Do they have an S3? When was the last time they did an S1? Do they dilute a lot? Because that's what's good. That's where you can smoke yourselves out. Is that, again, we're inside the market where everyone's sizing, everyone's chasing. But if the algos turn off, they drop a $200 million offering. This thing can halt down and be at minus 40%. Now, if you're 70% of your account and your account just took a massive haircut, you do that twice, you're fucked. Sorry, that was aggressive. But my point is that it's important to at least be able to take the emotions out of it. So use a matrix, at least use a checklist. If you're a day trader, again, what's their chance of dilution? What kind of volume is this thing? Is this trading the float? I was in a stock on Friday and it traded the float 3 or 4 times. And it really wasn't moving. I was like, this is odd, because if it's trading the float, again, volume precedes price action. This thing should have been mooning, but it wasn't. That's odd. Okay. And again, it comes down to touch and feel sometimes. As you get further into this game, you can feel if that company is going to do something. You can feel if the stock is being organically held up or if it's being pushed by market makers. You can feel that. So I think that it's so important, because at the end of the day, what's going to keep you inside this game is the longevity factor. And you can't do that. Very few people will be here longevity if you can't take the emotions out.
Yeah. So, I mean, you see one of these stocks up in a market like this, it's up 50%. You say to keep an eye on it. And you say, these are the things you should check for. If you're only into the price action of it, what do you look for in that situation? First thing you do is volume, market cap, shares available. How are you approaching that, seeing something up 50% and finding yourself in a position to be like, you know what, fuck it, this can go higher?
Yeah, so the one thing is going to be that volume. If that relative volume is sitting there and it's soaking, I mean, you can draw a line across. That's where we talk about that soaking. And literally, it'll soak to the tick. I mean, literally to the cent most of the time. And so if they're holding it up, and you're seeing this mass amount of volume, that's something where, okay, listen, at some point, and this is the way that I look at it, and this is why I am always the person on day trades to take profits quicker, because what usually ends up happening is that if they're mooning something and they're soaking, they have to get out eventually. Market makers have to get out. They're not just going to dump it. So usually what ends up happening is that they create an exit. What I mean by creating an exit is that they push this thing towards the high day. They, everybody's chasing it because it's curling, and then they dump it. That's how they get their exit. So it's one of those things where, listen, if you're trading something and you feel like it's being soaked, that's fine. But make sure that you're at the bottom of that soak, that you're at the bottom of that range, so that when it does break out and it starts to go, you're literally selling into the market makers. You don't want to get into a situation where, and it happens to all of us. In fact, it happens to me more times than I want to admit. They're creating their exit. They're creating liquidity, and then they dump the pig. And you're left holding the bag. I mean, what was it? Hudi, Hudi on Friday? I watched that thing go down like $10 a share in like 10 minutes. They created an exit. They pushed it a little bit higher, got volume, got buyers, and then they sold into them. I mean, you saw and that's where we always talk about the big exchange. When I'm going short on something, I'm looking for a big exchange because, again, market makers aren't just going to dump on the bid or the ask. They're market makers, okay? You're going to see it inside the tape, not on the chart, or, the chart will catch up after. But that's where having a volume bar is so important. Having the tape up is so important. If you see $8, $10, $20 million notional go through the tape, that thing's probably going to dump pretty soon, especially if it's after that 11 a.m., if it's after that 2 p.m. That's when I'm looking for a short, because most of the time you'll see the big exchange. They'll bring it higher and then they'll dump it. So that's where so many new traders get fucked, because you're buying the breakout and then you're getting dumped on. And I mean, it's like $20 million. It's literally like $20, $30 million if you're looking at the tape. They're creating an exit. So that's where, listen, if you're day trading something up 50%, look at what's the chance of dilution. Do they dilute a lot? Does this thing usually hold up and go higher? Does it trade well? Things like that. Look at the last run. What did it do? Stuff like that. Is this a former runner? And then on top of that, watch it during the day, okay? You don't need to trade it 50 times. One really solid trade at the bottom of the range where you pick your entry, you get that entry, you're sitting there soaking the very bottom, really gives you the best risk to reward on something up 50%. Because if it flushes through that, fine, you get out for a 2% loss. But your risk to reward is really good. If you're soaking that bottom of the range and it goes higher, you're already there. I mean, you can literally just scalp it. Bottom of the range, top of the range, bottom of the range, top of the range. Sell half at the top of the range and see if it goes higher. If it goes higher, great, you're there. If it doesn't go higher and it ends up flushing, you're taking that 2% loss and whatever. But if you're buying the top of the breakout, the top of the range, let's just say that instead of buying on the bottom of the range and you're buying at the top, that could be the difference of 7%. So now, let's just say you buy the top because you think it's breaking out. You buy that 7%, it goes down to the bottom of the range. Now you're down 7%. If it flushes from there, you're down 9%. So literally the difference of being good with your entries is the difference between 9% loss, 2% loss. Okay, now that's just the risk side of it. The reward side of it is even greater, because if it does break out, again, you have that padding. Now, that top of the range, that top of that resistance now becomes your support. So at the very minimum, you make 7%. Does that make sense? Am I explaining that all right?
Yeah, no, I mean, I think going over the percentages and like you're going over the risk reward in a good way where it makes sense for you can almost see the chart. Yeah,
exactly. And so I think that's how you have to play them. Okay, you can't be buying. Listen, I know that there's tons of breakout traders, and that's fine. But for me personally, to give the best risk to reward, I need to get that perfect entry, or I'm not trading it. I'm not trading it because it's just not worth it. Because if you do get smoked, I mean, you'll get smoked.
Yeah, you're already chasing. So make sure your entry is good from a chaser standpoint. I mean, it's kind of an oxymoron. It's oxymoron? I think that's the right one. I think it's an oxymoron. It's kind of an oxymoron. But yeah, no kidding. Like saying good entry while chasing. Like, it doesn't sound right, but I mean, you got to find the best one you can. I mean, knowing what we know.
Exactly. If I'm going to kill my body, I'm going to do it with alcohol, having fun. You know?
Like, I'm gonna do it with nice alcohol, like High Noons and White Claws.
Yeah, High Noons. I'm
aristocrat.
Not drinking. Yeah, exactly. You know, like, yeah. So exactly. So I think, listen, and if you have to, I mean, I got made fun of for saying this last time, but I curl my toes when I feel FOMO. Like, I physically curl my toes. I know people who they'll put a wristband on their wrist and they'll tug at it. I mean, that sounds a little like freaky, a little kinky, but listen, whatever works for you, that's fine. But the worst thing that you can do, and especially in this market where chasing is working, the worst thing you can do is get into that habit, because I'm going to say this 1,000 times until it happens, because I know when it happens, it's going to be brutal, because those are the people that are going to get slaughtered. The people 5Xing their accounts right now who don't know what they're doing, they're just chasing any breakout. Those are the people who are going to buy something that's up 100%, and that thing will end red one day. Like something up 100% will end red. And you'll get smoked, because what happens right now is you're buying the breakout, and then you're buying the dip, and then you're buying the dip, and that's working, and that's great. Make your money. But the second that faucet turns off, you gotta be, your size should cut in, honestly, a 10 at least, especially for the homies that are going heavier. So I'm gonna preach that until it happens, because I know it's gonna happen. It happens all the time. And then everybody's going to be bitching because, and nobody's making as much money as before. It sucks.
I'm chasing and it's not working. Why?
Yeah, no shit. Because, you shouldn't be and honestly, listen, I got bagged on Friday on that price target stock. And that's on me. But guess what? I knew what I was doing. I knew.
I had a general idea of what was going on in the general vicinity around me.
I knew there was a chance it would go up or go down.
Yeah, low chance it stays the same price. So, kind of rounding out some other stuff that happened in the week. Facebook is turning into Meta. I don't know if this has anything to do, aside from Mark Zuckerberg being a nerd, and He's no longer alpha or beta, but he's extended past the sigma male and has evolved into the meta male. And he's shed his scales.
I think what we're seeing, and Elon Musk kind of does, I mean, Amazon, listen, the big three, Facebook, Amazon, and Apple. Okay, we've never seen companies and we talked about this, I think, 4 or 5 weeks ago when we talked about Disney, generational holds. We've never seen companies with this much cash, with this much brand loyalty. So what we're seeing is that these companies are evolving and these companies are innovating. Okay, if you take GE back inside the 70s and the 80s, GE was the company. I mean, the company. They did everything. But their downfall was that they didn't innovate enough. They didn't innovate enough because they didn't, listen, they have brand loyalty, but not like Apple. Like, you ask me right now, I'll probably never not buy an Apple. Like, probably never. Okay, everything that I have is Apple. Okay?
By the time I'm 75, I will be on iPhone 51. Like, I just have accepted that fact that over 100,000 of my dollars over my lifetime is going to go to iPhones.
Exactly. And so what we're seeing with these companies is that they have so much cash. Their market caps are, $1 trillion? I mean, we've never seen that. So what's happening is that these companies are so big. I mean, literally too big to fail. It's scary because they're literally too big to fail. They have so much cash. It's like, yeah, fuck it. We'll buy them out for $200 billion. What's $200 billion anymore? But that's seriously the world that we're living in. So Apple can create cars now. Like, what the fuck? Like, Apple can pivot to that spot. Facebook can pivot. You're seeing Facebook pivot away. Not necessarily pivot away, but they're now opening themselves up to
throwback to when everyone thought Apple's car was going to be Fisker, and we all knew Fisker's gone to the moon.
Yeah, but that's what I'm saying is that listen, you saw with Amazon. I mean, Amazon literally has changed the game in so many ways. I mean, I get my water delivered within 2 hours. Like, that's ridiculous. That's wild. I mean, I ordered a costume 2 days ago. It was here like yesterday morning. I mean, they changed the game. And so again, you're seeing all these companies. I mean, seriously, it's scary because it's like we didn't see this in the 70s and the 80s. Like we didn't see this. These companies are able to pivot into any growing industry that they want. I mean, seriously, any industry. They have so much cash. Their market cap's so big. They can just absorb the company. I mean, seriously, Apple, Amazon can absorb any company that they want. Like outside of like the top 10 companies, literally any company, and it won't look like anything on their balance sheet. But if they truly believe that that company is going to provide value, I mean, VR, I mean, Facebook literally is creating a watch. They're creating VR. It's insane. So that's where it's great to see from like a shareholder perspective, but it's also scary because it's like these companies truly could. I mean, what's the next step? 10 trillion. It's really not that, like 10 trillion for these companies is really not that far off.
You know what they say, after you make your first trillion, the second trillion comes twice as fast.
Yeah, but seriously, like what's stopping them? If Apple comes out with a car and it actually fucks, there'll be a 10 trillion fast.
Dude, if Apple makes a car that fucks me as I drive, yeah, dude, I'm getting one immediately, obviously. But no, with it becoming Meta and them in VR, I've got it up here. They're going to make it so Facebook, you have all your friends, you have your pages. They're going to make it VR. So, on VR, how you can hang out with your boys, play poker. They're going to make all of Facebook one big metaverse. And you can hop in your VR and chill with your homies that you have added on Facebook. And they want it to be like universe number 2.
Seriously, but what's that fucking movie where everybody's fat and eat Wall-E? Like Wall-E.
Toy Story 2. Oh no, Lion King 2.
Like, what if we're all on chairs and we just live in VR? I mean, like Facebook and Apple and all the other bitches, like they'll be running that shit. Like their market caps would be like 100 trillion. I'm not even fucking around. Like I don't even know if I want to live inside that world. But that's where we're pivoting. Like my parents truly didn't think that like touch phones would be here by now. And, because they
because fucking 50 years ago, everyone was like 2020, flying cars, robots talking to us, robots cleaning for us. Well, we do have Roomba. The thing is, everyone just thought we'd have beep, boop, beep, boop. Yeah, Roombas.
But my point is that like internet's not even that old. Like internet's not really been a thing that long.
Yeah, it's been like really big for like 25 years. Like
that's
really
not
big.
That long.
Yeah.
You know what I mean? Like when you were born, internet wasn't a thing.
Yeah, no, in 94, when I was born, people were like sending emails and shit, but no one was, Ask Jeeves at best. I remember like in 2000, and I was like, you're lucky, man. Google, it was more Ask Jeeves and Yahoo searches.
Last night, I'm out like searching like DK Metcalf, like asked some girl for like a 4-way. Like I'm able to just pull that up on my phone. 30 years ago, you couldn't do that.
You asked a girl for a 4-way with DK Metcalf?
No. I'm saying like I typed it inside my phone and it came up in like milliseconds.
Okay.
Like I heard that rumor, and so. But like my point is that it's at the touch of our fingertips. 30 years, that wasn't a thing. So imagine where we'll be at in 30 years. I mean, we won't even touch each other. We'll touch each other virtually.
Dude, yeah. Well, that'd probably be good for social distancing.
Imagine trading inside VR. Like you could just like hit the ask, like physically hit the ask.
Yeah, dude. I mean, dude, just get a Stream Deck and you can just press like buy.
Dude, I have one. I don't understand it. That shit's too complicated.
Yeah, it's confusing. I couldn't figure it out either, so I just put Fortnite, Golf with Friends, and Discord on there.
Nice.
All right, that should give us an episode. All right, guys. Well, thanks for joining us on another Sunday, and we hope you have another trading week, and stay safe on Halloween. Don't let your kids eat shrooms or razors.
Nice.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.